Good inflows from FII+DIIs, bad news on many fronts. Market, large cap and mid cap down, small cap flat, micro cap marginally up. A very, very peculiar market today. So if you ask me, the news dominated the flows part. So FIIs were positive and DIs were positive. I think 1500 crores plus 2500 crores. That's 4000 crores of money, fresh money came into the market. But large cap index down 50 basis points, mid cap index down 45 to 50 basis points, small cap index flat. What then accounts for this? So the only explanation is that there was bad news and the markets corrected, and then there was a bottom fishing, some value-based buying, but which still did not pull up the respective stocks above yesterday's level. So the overall market corrected. Which sectors did well will give you a clue here. There was only one sector which had a 1% plus, that was defense. Apart from that, there were a whole host of sectors which were neutral to up to 40 basis points, auto, consumer durables or whatever, very small flat. But there were four huge negative sectors: IT, realty, PSU banks and FMCG. So this then implies what? What was the bad news? The bad news today was that the 60-day ceasefire got over yesterday on the U.S Iran war, and Mr. Trump indicated that he is in no mood to extend the ceasefire. So Brent crude spiked past $90 to $91. That was one negative wave. The second negative wave was more domestic. Skymet, one is IMD. IMD had been generally giving a positive view of the monsoon and unseasonal showers coming and bailing it out and all of that over these weeks. But Skymet, the other operator around the meteorological side, today said that there's an 85% only of rainfall compared to long period average, and they have actually said that there's a 70% chance of a drought. Very shocking. And this is because they are expecting the El Niño to come and really hit hard in late August, September. And also they are saying that the Indian Ocean Dipole, IOD is called, which normally comes and helps to counter the effect of a weak monsoon, is also not so predictable. So this bad news, I think, hurt the FMCG and the rural demand stocks, and probably gave a thing about positive RBI tight policy, and so PSU banks and realty have corrected, and IT has been now on a downward spree for quite some time. So apart from this, globally also there was not so good news, because of course the Brent crude oil spiking inflation in the US. But if you remember, recently there was unemployment data which was soft and some inflation data which had come down, but the government's fiscal spending seems to have increased. They are issuing more debt. So 30-year yields in the US have gone to 5.33%. Even the 10-year yield is touched 4.75%. And this seems to be a worldwide phenomenon, because Japanese 10-year yields at almost 3% are at a 30-year high. So rising interest rates across the world, which meant that though the dollar index didn't show much impact, Indian rupee weakened a little bit. So all in all, I would say today was a tug of war between bad news and flows stepping in, but probably after a significant correction happened. Smart buying maybe, but didn't help the index today. To end on a positive note, I would like to point out that there was some data released on India credit to GDP, in which for about 10 to 15 years has been at 50 to 55% of GDP, has now gone up to 67% of GDP. So this indicates that this could be early signs of a private sector credit capex revival. The point is that it may not be in the traditional manufacturing sectors, it could be in the new age sectors like data centers, renewable energy and the likes, right? So on that fairly positive note, I do hope that the markets will slip out of this negative zone now and kind of stabilize in the coming days. Thank you.